Hi there. I'm an active trader. Again, a little introduction. I'm an active trader. So, ChatGPT says that there's only 11% of people who are active traders versus the investors, 61% of investors out there. So I'm one of those active traders. And the other day, one of our students asked me, "What's your backstory of what you do?" So, like, why you do it? So my little backstory is like this. Again, in all honesty, it started that I was a business owner. I was bought out back in 2016 timeframe, 15. I was bought out from my company, and I was receiving big chunks of money because it wasn't like a one single chunk of money, but big chunks of money. And I decided, okay, I need to invest somewhere. So how do I invest it? Well, I did what normal people, I thought, at least at the time, normal people would do. They will just put it into something like mutual funds. And so I took half of my money, not half of it, like I think 1/3 of my money, and I took them and put them into Vanguard's type of mutual funds. I divided up between different mutual funds. I researched it. I went to the Morningstar. I looked at what the different mutual funds do, what's their returns, and most of them have a five-year outlook or 10-year return, and then I chose the best ones and invested money over there. I try to consider something like, oh, some of them are going into the equities more, some of them are going to international, some of them are going to the bonds. So I tried to find the mix, and I was researching, put it all together, thought everything is great. Okay, so that's beginning of 2017. And then at the same time, I said, okay, I know that I'm good, but I'm most likely not that good. Okay, so what do I do that I will be able to actually put it more efficiently? Well, obviously there are professionals, right? I'm not a professional. I was a professional e-commerce dude, the chief architect at a big company, and like I knew how to do the solutions, but I didn't know too much about the finances of the time at the time, like what to do with the money. So I decided, okay, I'm gonna go to something like Chase private banking, and then put the money over there in Chase. And so I hired them basically, right? I got into the Chase private client, a little advertisement of that, but anyway. So, and at that point in time, they actually put my money into, based on my aggressiveness, into two different funds. For my 401k account, they put it into one way, and then they put into the regular managed account, which goes directly into the stocks, supposedly beating the benchmark, which is the S&P 500. So everything looked great, looked fancy enough. They had all kinds of brochures with and the surveys and the questions to answer. Then they compiled the profile for me. Everything is great, right? Everything is put together. Feels awesome. So I put it all together with them, and again, clear sale, 2017. If you look closely at the 2017, you know what I'm talking about. Everything is great, except the 2018 comes along. All of a sudden, the first blow at the beginning of the year, bam, the market went down, then recovered. So like, okay, my mutual funds with the Vanguard that I put in myself, and the money which are managed by the bank, are all going down. Okay, so okay, not. I mean, they know what they're doing, right? Supposedly. Then at the end of 2018, the second blow, especially the tariff wars, which is very similar to which I'm going right now with. Like right now it's 2025. We also had tariff wars, and it just at the time it was just China. Right now it's the whole world against U.S. kind of, with our U.S. against the whole world kind of a thing. So anyway, so the second blow happened in 2018, and right after Christmas, before the New Year's, I'm sitting in the office with my money manager from the bank, reviewing the performance for the year. Okay, it's kind of like a performance review, right? At the end of the year, he has this fancy brochure with all kinds of glossy and printed out and colorful number after number, that, oh, we put that much into the large cap stocks, this much into the mid cap stocks, this much into the small cap stocks, this much into the international stocks, and blah 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 blah, all that kind of stuff. To me, it's like everything that goes over above my head. It sounds very fancy, and yet I'm just waiting for the number. Okay, what's the number? What's the number? How much did I make? Well, 2018, the market went down, and look, market went down 20%. Your portfolio went down only 18.5%. I'm like, really? Only? Only 18.5%? Yeah, only 18.5%. So look, we saved you 1.5%. So I'm sitting there looking at all these glossy numbers and the prospects and the brochures and all these printouts that he had, and everything is so great except for one little point. Okay, what if it would have been 2008? Then what would have happened? Well, what would have happened is that I probably would have gone down maybe around 50 something percent instead of 56% that the market went down, right? So I'm just basically riding it down with the market. So I'm not really better than the market. That's when it dawned on me, like, oh, shoot. It's not that they know what the hell they're doing. I mean, it sounds like they know what they're doing, but in reality, do they really know what they're doing? And as I decided, okay, there's got to be a better way, so I start digging, reading. I mean, that's what I do. Again, I just try to learn a lot, and I'm learning. And then I discovered that the way that I was choosing the mutual funds, again, it's probably not the right way of doing it, because past performance is not really indicative of what I'm going to get in the future. Even though they put it in the small print fonts all over again, everywhere, it just really doesn't gives you the performance. And then at the same time, I just realized that the money managers at the banks, they really don't know either what they're doing. They're nothing but the salespeople. They are just kind of handling you so you don't freak out when the money goes down, but that's about it. That's all they do. They know the stuff as far as here's large cap stock, there's a small cap stock, there's micro cap stocks, or whatever, blah, 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 this stuff. But it not really is, it's like knowledge does not mean that you will actually make money in this type of case. So I started to research, and I first decided, okay, I want to be a swing trader and a day trader. Okay, that's my again story. Continues. So I I decided that, okay, day trading is it. Okay, so I opened an account and I put money in. I thought it was significant. I had like something like $50,000 on the line because of the pattern day type trader rule that you should not have less than 25,000, I believe, which maybe that will change in 2026, I hear. But right now, again, at the time, it was 2019. It still was in place. I mean, it's still in place right now in 2025. But anyway, so that is why I decided to double it, so 50,000. And I'm sitting there, okay, well, maybe even 100,000. I think I had the bigger account. And then the time comes in to actually day trade. So I've read a couple of books on the subject. I thought that I already know something, how it works. So I experimented a little bit, and then I decided to try it out with real money. I'm sitting there and sweating profusely when my account goes down by $20. I'm just freaking out that I'm losing like $20. So I'm getting out too fast. Then I decided, okay, I can't be that little chicken, so I have to be a little bit more serious. I mean, percentage-wise, $100,000 account, and then $20, it's like basically nothing, right? So, okay, I can do better than that. So I remember I was really freaking out. To the point that I was really emotional. Sitting in the corner at the end of the day, didn't let my wife know that I was literally gambling with my money at the time. Lost like $200 and then $1,000 and then one time $2,000. It was just felt crazy because every time I win, let's say $200, I lose 700, and the next time I win another $200, I lose 500, and the next time I win $300, I lose another 800. So basically, it's kind of like a downward spiral. You're not really making money, at least in the way that I was trading. And that's when I realized that, man, I was trading without strict rules. I had either too many rules based on all kinds of books that I read and discretionary trading that they use for day trading, or if it was too simple, then I felt like it was too simple. And that's the reason why I couldn't really trade it that way. So I stopped trading at the end of 2019 because I felt like, okay, I'm just losing more money than I'm making money. And I don't know why. I don't know how to change that situation. So that led me to the point, well, okay, what do I do? Maybe some swing trading. So I started doing them some swing trading, but again, I don't have strict rules for the swing trading either, because I've read some books, I've read some things, but I don't know exactly what the hell I'm doing, because I don't know what to expect from this system, okay, from the rules. I don't have the back testing for it, and manual back testing can give you only a little bit, but not much. So again, just knowledge doesn't mean that you're going to be an active good trader, and that was showing in my performance of my account. I was losing more than I was winning, and sometimes I committed to all kinds. I committed, quite literally committed, all kinds of sins of trading. I held the position for too long. I got out too soon. I got in based on the fear of missing out. I got out because of fear that I'm gonna lose my profits or I'm gonna lose too soon. It's basically like committed all kinds of sins of trading. Not what to do. So if you do want to know that, I can have horrible lots of stories about that. So I'm not gonna bore you with this one right now. But the idea is that until I came up with the Lawrence Bensdorf book, that's the one which opened my eyes. It's called 30-Minute Stock Trader. It's not referring to the day trading or the 30 minutes that you need to do. It's more like you should not spend more than 30 minutes a day. If you're an active trader, you should not spend more than 30 minutes a day to actually trade. But that was at the time because he didn't even have the automation. Now we do have full automation of everything. So I spend about 30 seconds a day if I want to spend. I don't even have to. Just looking at my report, and everything is submitted already, so no need to think about it too much. But that's the revelation was that the strict rule-based trading is much better for me and my personality, the way that I trade. It wasn't that, I mean, it may not work for somebody else who really know the market somehow, and they know they feel the flow. I don't feel that flow. I mean, I feel something, but I wouldn't be trusting myself to make the right decisions at the right time. I would rather have tested, proven rules. And that's the reason why I chose systematic mechanical trading. Okay, so that's my backstory, that's how I ended up where I am. And I'm a big proponent of systematic back trading, the systematic mechanical trading. Okay, so if you're curious what it is and how it all works, click on the link below or go to our website, tradingsystems.com. You can discover a lot more and talk to even me directly. If you want to talk to me directly, you can just apply for the mentorship. It doesn't mean that you need to be a part of our community or be a part of our student base. It just means that I need to know a little bit background on you before you can actually talk to me, so that I know how this may help you. Because if you only have, let's say, $50,000, sorry to say, it's not enough. You need to have a little bit more than that to really be able to utilize this type of trading. There's no miracle. It's not get rich scheme, not at all. I'm not promising that you're going to get huge returns. It's more like you're going to get around 20 to 30% on average compounded returns per year, and around 10%, 10-15% drawdowns. That's pretty much achievable, more seriously achievable, versus it's not like 100% return, so I'm not going to lie to you. Okay, so otherwise, place that call, book a call, check our website, and if you have more questions, again, don't hesitate to just reach out. Okay, see ya, bye.